Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today we'll probably take a look again on the Canadian dollar. Since we have started this trade, let's to follow it for some time. Also guys, right now on the euro currency that we usually tracking, it's nothing really interesting is happening because market is calling in an area between the 108 110 area, so we need to break out some important level to say definitely what direction market has chosen. So right now we do not have this clarity yet. So as we said, to get the bearish setup, we need to break out down to below the 107. To get the bullish setup, we probably should need some upward continuation. But right now, guys, market still keeps chance on the further upward continuation. Because market, if you'll take a look at the daily chart or on the 4-hour time frame chart, I could even show you. You will see that market keeps chance to form as the bearish butterfly as the bullish butterfly. For example, on the daily chart, why this level is so important? This is euro currency daily chart, because here guys, right now market keeps chances to form bearish butterfly with the downward continuation, right? But while until this low is valid, is still holds, market also keeps chance to create this bullish butterfly to the upsides. And that's why this level is very important. And to get clarity, we need to see what really is going on, what really will happen. If market will break this low, this will be one story. But if it will start to move up, this will be quite another story. And for this butterfly, invalidation point will stand right here. While market is calling inside of it, so any scenario could take place. That's why right now this floating market, it's not really very attractive for trading. Because we have waiting for a long time when the market will choose the direction, but we still haven't got the solution of this riddle. So market is still calling in a wide range and keeps chance as for upward continuation as for down. Since we today starting, we will get today the starting session of the Federal Reserve meeting, today's meeting, so volatility could rise and probably and maybe the results of the Federal Reserve, maybe Ms. Yellen will say something that push market in one or other direction. Maybe it will impact the market and will force it to move to the upside or to the downside. That's why currently, guys, we see that some other scenarios on the different major currencies are more interesting, and they provide better clarity, better potential. Particularly speaking, we are tracking right now not just the Japanese, not just the Canadian dollar, but also the Japanese yen, New Zealand dollar. So they are forming right now interesting setups, but they are not ready yet for taking the position. That's why we are not mentioning them in the video update. So as soon as they will create the acceptable setup, suitable setup for trading, we'll definitely dedicate the time to different currencies. Today is the time for Canadian. So if you remember, now a weekly research was said we have created two-step trading plan. Although we have the bearish view on the Canadian dollar in the long-term perspective, and we think that it will hit major monthly target that stands 10 points higher, so approximately 155 area. But this probably will not happen very soon, since market is overbought on monthly chart, and our two-step trading plan mostly is focused on a shorter period. The first step is very short, very short in terms of the time, since it mostly stands on the daily chart and we are trading it right now. The second step is a bit longer in time, but it stands on the weekly time frame scale, and we expect another leg down to the 134, 135 area as soon as first step will be completed. So that's our trading plan on the Canadian dollar. Of course, overall plan will depend on the geopolitical tensions, on the situation, how it will develop in the Middle East. So, of course, different surprises are possible, and we will adjust the trading plan when we will need it. But right now, based on the situation that stays right now, we think that's really it could work. At least first step starting to work. So as you can see, our initial suggestion was based on the Jod Napoli directional pattern, since we have nice thrust up, and bread and butter by directional pattern. When the market forms the thrust, it should reach some significant support, Fib support level within the 3 closest below the 3x3 moving average. This green line is the 3-period moving average shifted forward for the 3 periods. So we have first close below it, this big drop, second close below it, and market has hit major support. Also, as you can see, market stands deep oversold on the monthly chart. That increases the value, the importance of this level. And we said that our setup is based on the counter reaction, because the initial momentum to the upside is very strong and it's still here, and it will have the rest impact on the price. Will be some rest of the momentum that will push market high. That is the core, the idea of the bread and butter trade. It's why it calls us the bread and butter, because it carries very significant chance of success. So as you can see, market has started well with this setup, so it has formed nicely looking bullish engulfing right at the Fib level and starting to move up. Right now it stands at the intraday resistance that coincides with the weekly pivot point. So if we'll take a look at the 4-hour time frame chart, you'll see first that is the target of this bread and butter trade that stands at 44.70. It's very close to the weekly pivot resistance one. This will be the minimum target of the bread and butter. It usually reaches. But right now on this upward action, as you can see, market has hit resistance. So on the way up, this is weekly pivot point, as we said, and take a look. That is 3.8 Fib resistance, 143.33 area. So for those of you guys who have taken position according to our trading plan right at the bottom, based on the patterns that has been formed, now it's time to move your stop to the break-even and just watch the movie. What will really happen? For others, if you still would like to take the long position, and since market right now stands at resistance, you could try to take the long on a retracement down of this leg. So I can't exclude that we probably could get some kind of the, I don't know, maybe this will be some sort of the ABCD pattern to the upside. Something of that sort will happen. It's very possible. Because currently, as you can see, we see the V shape of the retracement. This is not really typical when the market has still very significant upward momentum. So probably more chances that market will form some kind of the ABCD compounding retracement. That's why you could try, if you would like to take the long here, you could try to wait when it's retracement down and trying to buy the dip. So enter on the retracement. This will be some sort of the Jod Napoli Minesweeper A technique that is based on the starting of the upward action and then trying to take the position on a retracement down. So as you can see, it's not really awful thing if you have missed the initial entry. So you almost always will have another chance for taking the position. Don't be upset that this entry point will be worse. I mean, the price will be worse than here. But at the same time, guys, you will be able to place the tightest stop. So take a look at the hourly chart. In the hourly chart, we see that market also has hit the agreement area. So because market has completed A, B, C bottom 1618 target and creates the agreement resistance with the Fib level. So since market is not at overbought on the daily chart, retracement down should not be too significant. We think that the very suitable, most suitable level to watch for a possible entry is this area. It's 142.20, 132.40 area. And you could place the stop somewhere slightly below this level. It's not too far. Maybe you could hide it below this 618 level. Hardly market will show deeper retracement because no reasons for that. market is not at overbought. It has started from the oversold on the daily chart, so our prediction should be faster and stronger because oversold pushes market higher. That's why probably retracement should stop somewhere around this area. So this level we will be watching for a potential long entry as the second chance for the long entry, and trying to possess ourselves with the daily bread and butter trade. So besides, guys, as you can see, since we have the engulfing pattern, this minor retracement right back down slightly inside of the body of this engulfing, so this is engulfing on the weekly chart, is absolutely logical, because almost every time when the market forms engulfing pattern, morning star, evening star, it shows some minor retracement back inside of the body of this pattern. That's almost the rule of thumb. So almost every time this happens. That's why this retracement is absolutely logical in current situation. So we continue to monitor the Canadian. We are continue to trade it, our setup. So right now, this analysis mostly for those of you who haven't taken the long position here, but for those of you who would like to take the long. So in this case, you could watch for this area for potential taking the long position. So let's see how market will develop. I hope that we will get the target on the current week. Let's hope that the Fed Reserve statement will not impact negatively our trade, and let's keep watching what will happen.